If you own any stock, if you own any ETF, if you own any cryptocurrency, if you own any mutual fund, if you are investing somehow on paper assets, meaning the stock market or the crypto market, then you need to watch this video because it's a warning. I'm kind of getting out there, especially as there is so much negativity out there. I mean, you just look at every headline. I just saw another article this morning on Market Watch. It was a strategist or a financial analyst calling on people to start praying because the worst is yet to come. Billionaires, the Big Short, Michael, Berry is calling on stocks to drop down to 40 to 50% from these current levels. But this is just headline, all right? And I do believe a lot of that is a little bit overblown because if you kind of pay attention, every time the market is dropping, it's based on news that we already knew, but for some reason, it keeps dropping. Look, this month of September has been the worst for stocks since 2002. Since 2002, folks, for the last 20 years. The market has never ever had a September as red and bloody as the one we just terminated, the one we just went through. All right. Now, if you look into the S&P 500, which is kind of a reflection of the entire US stock market, you can see that the market has pretty much erased all of the gains we've made since November of 2020. Look, November 2020, that was November 20th, all right? 20th. The S&P 500 ETFs, the SPY, closed around 355. But look, the 52-week low is 357. So since November of 2020, as of the close of Friday, which was the close of the entire month of September, every gain was just erased because we were actually, flat. This is a loss of pretty much 33%. Never happened in 20 years. Now, what we need to pay attention to in the midst of all this negativity going on, is the fact that historically, Septembers are the worst month for the whole year. Now, regarding the macroeconomics, circumstances and recession fears and inflation and the Federal Reserve and central banks around the globe trying to tame inflation, with increasing interest rates, it did not help at all. It did not. And that's why we ended up with the September worst for stocks since 2002. Now, let's look forward because today just kicked off the fourth quarter. And this is going to be the end quarter for this year, 2022. And we're going to see that everything is not as bad as the headlines are suggesting it to be. And we also see what you should do as an investor because I think the best is yet to come, not the worst, depending on where you stand on your investing journey. All right. So what I want to share with you guys here is that, what we already said. Historically, the stock market is always down in September because this is the worst. Why? Because usually you have, summer. You usually have a summer rally. Usually, not all the time, but usually have a summer rally. And then September comes off, and September, people start taking profits, and that's why historically the market tends to be down in September compared to the other months, just because of the the rally usually happening on during the summertime. But this year was, as it was mentioned, particularly crazy. But looking ahead, what does that mean for the month of October, November, and December? Look. The S&P 500 has risen 46.15% of the time in Octobers that follow a 7% or more September decline versus a rise of 57.6% of the time for all Octobers. So in other words, we have a 50% chance for the market to climb in October, especially as we're getting out of this worst September. Now, if you look at the SPY here, we touched the bottom. Everything was just worse because in September, the market touched the lows of 2022. All right. Not only the lows of 2022, but as I mentioned, it pretty much erased all of the gains since the last 2 years. But since the last 2 years, is the economy better than then? I mean, the answer is clearly yes. Why? Hear me out. Companies has cash on hand. Companies' balance sheet are a lot more stronger than they used to be in December or November of 2020. Earnings have shown that, over the last 2 years, companies has made a lot more money. Now, that money hasn't just, evaporated. Some of it has been spent into hiring people, investing into some projects. And some of those, it's a no-brainer because it's part of the company viability, all right? So they cannot just get rid of it. But if you still see people going out, on spending money into stuff, then yeah, it means that the US economy is not worse than what it was in 2020. Now, it's clear that people stop spending money as they used to because of inflation and recession fears, but they're still spending money. Companies are still spending money, and that is what is good for the economy. The only difference now is that they are more selective around what they're spending money on. All right. I mean, just look at your household budget. Have you stopped going to the groceries? No, but you're more selective at what you buy at the groceries. All right. Same thing for what we call discretionary spending. Is the money you spend around stuff that you don't necessarily need in order to live. Entertainment, travel, recreational, etc., etc. That has not changed that much. That's why I believe the economy is not going into the ground as many headlines are suggesting. Now, if I also look at the VIX, this is the fear index, anytime it hits levels around the 34, which we ultimately hit by the end of September, it's somehow followed by a drop. It happened all year long. It happened every time. It goes up to, the 30s, the high 30s, boom, drops. Why? Because whenever you hit rock bottom, there is no direction for you but up, because it means that stocks and all of these, crypto, these ETFs, these mutual funds are just on sale. And that's why people realize that once we are, on the lows, and they start buying again. But I want to share with you 3 things that I think are going to push the price of these assets to continue to go up, because people will see things, and reasons to buy. The first thing is China. As I mentioned with you, I shared with you, a couple of days ago, China is now trying to dump huge loads of the dollar, of the US dollar. That definitely will mean that interest rates will go down. Second, big banks are now calling on shorting bonds, because people have been taking money out of stocks and putting into bonds. That's what, propped the interest rate, the yields to go up. And whenever yields go up, equities go down, because people are trying to park money into bonds. So if banks are shorting stocks, bonds, it means that the price will go up, which will push yields down, and yields going down means equities, stocks also go up. Same thing with crypto. All right. Now, the third thing is we're going to have the next CPI data report coming into October 13. The Fed is already committed to fight inflation with all things, but there has been a change in that paradigm, and it's about the UN. United Nations calls on the US Federal Reserve and other central banks to halt interest rate increases. Central bank risk pushing the global economy into recession, a UN agency said on Monday. Now, is that what prompted the Federal Reserve to have an emergency meeting today? Possibly. All right. We also have the whole Credit Suisse scandal, going on, and potentially may lead to the financial firm either filing bankruptcy or potentially having to do a drastic change if they want to continue to be alive. So all of these things are being caused by what the Fed does. And that's why maybe the United Nations are calling on central banks across the globe to pump the brake on interest rates increasing. All right. So all of these things literally are catalyst I can see pushing into stocks to rise again. But the bottom line is, if you watch this video, you're there are high chances that you are on the wealth building phase, which I am. I'm in my 30s. So it's now time for me, since my 20s to start building wealth. So for you and I in the phase of building wealth, it doesn't make sense for all to pull money out of the stock market because we are in the accumulation phase, right? We want to accumulate as much shares of our favorite crypto, ETFs, and stocks as possible because with time, we have the time compounding effect, which will definitely make, everything that is worth $100 now being worth, maybe $1,000 in just 2 decades. But by then, the money we've been pumping and putting in the market right now will be growing, and just the interest or the dividends or the passive income, we want to get into that in order to make our money work for us, because by then we will not be strong enough or have time enough to continue to work in order to exchange time with money. That's why it's very important to build and accumulate now. But the thing is, now is the best time to accumulate, the best time to do so, because everything is just on discount. Don't get it wrong, don't get it twisted. The recession is going to happen. It's going to go over. Even if it takes years, it's going to go over because this is part of the economic cycles. All right. Second, inflation is also going to go down. And once it does so, everything is just going to start going back up again. So if you miss this chance, if you miss this window, it's going to be a lot more expensive for you to accumulate and to build wealth because everything will just be, again, on fire. The ultimate thing in the stock market is to buy low and sell high. So if you don't buy now when things are low, when are you going to do so? When it's up? No, that's a mistake. And you don't want to do that, especially if you are still in the phase where you are building wealth. So my take is, if you still have your strategy to build wealth, which is, maybe putting money towards your 401k, your IRAs, buying your, in your brokerage account, buying your favorite stocks, ETFs, even crypto, then now is the best time to do so, because that's why I'm doing. I haven't changed that because I think it's the best strategy to go through these uncertain times. Now, when these exceed, maybe they double, they triple, they, 10x, maybe 20, 2000x in value, then it may make sense down the road to sell that, or to just take the money out and put it somewhere where I need to protect it and make it work for me while I sleep. And that's why you build true passive income. So yeah,